my friends. Chris Marcus here with you on August 20th, 2018. And an interesting story from last week comparing a lot of what's happening now to the 1997 Asian debt crisis. This was posted over on Zero Hedge. And again, certainly to me, the comparison seemed valid enough through the points the author, who is Nicholas Colas of datatrekresearch.com, mentions, like today's U.S. equity market in 1997, stocks had already posted many years of strong performance. Certainly the case now, given last decade of monetary policy. Mentions the spillover effects took a while to reach the U.S. markets. Certainly that's happening again now, where we see the Turkish crisis, problems in Italy with Deutsche Bank, and goes on and on. But so far, I think the S&P closed 1% away from its all-time high today, so has not impacted that. Now, one thing that was interesting here is that he mentions things should be a little bit better this time thanks to the Fed's guidance, although that's where I would take a different view myself. He writes, by the Fed's analysis, the U.S. banking system can now withstand the extreme events without cratering, so a milder financial shock like emerging market crisis should leave the banks okay. And where was this last note he mentioned? If investors believe the Fed's stress tests, well, there's the problem. I don't believe the Fed's stress tests. Again, this was the same Federal Reserve that in 2007, 2008 was saying subprime was contained as it was imploding and got a lot worse. In fact, the problems are being caused by the Fed's policy. So I'll slightly disagree on that third point yet. Again, interesting article to take a look at. It's linked right below. Because, yeah, I do agree that there are some similarities, and certainly things are setting up in very similar fashion. And given what we know about the monetary policy, at some point these are going to have to be unwound, and it'll be interesting to see how that happens. So as always, stay tuned to the Arcadia YouTube channel, and I will keep you posted. Thanks.